All right, good morning, everyone. It's Wells Only, and this is the chart set for the crossover of June 19th, 2021 at 000 UTC. That is the Meridian time zone. So if you're in London, that's you. If you're anywhere in that time zone, that's you. So this is a chart set video, and we're just going to get right to it. Disclaimer: the information displayed in this broadcast is known to cause increased amounts of FOMO. Wells only is by himself and is not responsible for any losses you may accrue for having weak baby hands. Because you have to remember one important thing, and I'm probably going to highlight this every time that I do one of these chart set videos. You have to remember that when you're selling hex, you're selling into a perma bid because somebody's always trying to buy it. There's always more people buying hex than selling hex, and this vacuum action is what causes price to move how it does. And we'll see. I'll break that down a little bit further over time. But yeah, this this is just what happens to all the sellers, right? They sell, and then 5, 10 minutes later, the price is above where they sold. So this here meme I made is very apt, very correct in many ways. So let's get into it. All right. So first thing I like to start off with talking about what economy is. But first, I'd like to welcome all the new subscribers. I've noticed that my subscriber count has increased significantly over the past couple of weeks. So let me welcome you guys aboard and let me show you guys where you should go if you're new to crypto. Um, just because I want you guys to not be lost. I have three playlists um, that I have pretty much all the videos that I've made outlaid within each of these playlists. The chart set one, pretty straightforward, is the one I'm making now, is this one. The macro talk is all the macro stuff that I've done to date, and it includes all of these videos. So check those out at some point, but those aren't as important as the Hex Talk Live playlist. And the reason I say that is because you want to catch this video, you want to watch this one, you want to watch this one, you want to watch this one, and you want to watch this one and that one. All of those pretty much break down in great detail uh, everything about crypto, a lot of things about markets, um, and just a lot of stuff that you kind of, this doesn't belong here. It should be up here somewhere. So I don't know why it's down there. It should be in chronological order. Anyways, so this video explains how cryptos work, the network effect. And the network effect is prevalent across all markets. I end up showing this in video 2 or this one. I don't remember which one. But just watch all of these. These are very important videos because they're going to really prepare you not to just understand Hex, but just to understand the crypto market in general. So please check those out if you're new. And if you don't check out all of them, make sure you at least check this one out because that one is the holy grail, as they say. All right, get this out of the way. All right, so let's get to it. And finally, thank you for subscribing. I hope the content is quality and you share it with all of those that need education because this is what we're all about over here. All right, so starting off, an economy is basically a pie, right? No matter where we go in the world, from our local area, right, where we live immediately, our local economy, to another country, right, i.e., global economy, international level. You're all interacting within one pie. And how does that pie create value over time? Well, it's very simple. Um, it's very simple. You have the private sector, which creates the value, and then you have the public sector, which is the government and all of its affiliated entities, which are there to facilitate services and support, basically, for the population, i.e., to keep society functioning, quote unquote. So what is the point of this? Well, the point is to understand that when the public side of the pie gets too big, it leads to what we're experiencing today. Right now, if you are an average consumer, or excuse me, average person in the Western world that has a job and pays bills and all of that regular stuff, odds are your income is already taxed 20, 30, 40%. So that means out of the gate, you personally, your own economic pie is docked at a greater or similar clip to this. And this is just your income. This is not when you go out and consume items. So it's very important to understand the transmission of dollars and, well, just fiat in general, right? How money moves from A to B to Z. It's very important to understand that, because that is how you gain a grander understanding of the economic lie within which we live. Because that's really what this is. That's why crypto exists. That's why we're going through all of these motions present day. Because as I always say, there's no way in hell anybody voted for 2020. You can't sit here and tell me over the past 50 to 60 to 70 years this is what progression looks like. I just highly disagree. So again, the private sector creates the value, the public sector takes the value, and fraud, waste, and abuse is the term that comes to mind. Because you can't tell me that with all of the dollars that we give, or all of the millions of billions of fiat that these folks receive, that they can't actually do anything with that, with those funds, to the point that they have to continually ask for more and nothing ever improves ever. Like, this is the point of understanding an economy and how it actually works, because it's about the distribution of the capital. It's not really about the means of production. It's not even about the means of anything, because the fact of the matter is that people are always going to want crap, period. So with that, there's always going to be opportunity to supply that crap, right? Widgets, whatever you want to call it, doesn't matter. At the end of the day, it's just material items that mostly you don't need. This is the point of an economy. If you look around your house and you sit there and consider what you've actually touched in the last 6 months, odds are 50% of it probably is going to be on that list. And these are the things to keep in mind when you're considering an economy and how it functions and what the purpose of it is. I'm sorry for that long drawn out explanation, but new folks need to understand this. If you're new to economics and finance, it's very important to understand the big picture, because it's what really helps you understand what's going on around you, which is also the small picture. Very important to realize you can't ignore either. So let's keep it moving. So we're going to go through a couple of market cap dominance pie charts here for HEX versus the rest of the market. Now, the first thing I want to highlight is that what we're looking at here is Bitcoin in orange, Ethereum in blue, and HEX in magenta, with the rest of the top 100 cryptos in the market space in gray. Now, highlight also that HEX has only been around for 18 months, whereas Ethereum has been around for 6 years and Bitcoin has been around for 12. Now, HEX is already 3.3% of the market cap as of almost 24 hours ago. Well, before this, the first chart that I took, the value was 3.07%, and this was probably a week ago or 5 days ago, something like that. But we're going to run through a series of charts that are from over the last 24 hours, basically. And this is just showing, right, how the decorrelation of HEX between the rest of the market is such that while the rest of the market is falling around it, HEX just continues to gain market share while the rest is just doing whatever they're doing. And this is at 1500 hours last night. As we can see, the rest has decreased in value from that point to that point, whereas Ethereum has also lost value, but Bitcoin has gained value. Small amount, 10 basis points, but that's something. So let's go to this morning. Let's see how we woke up today. We woke up 3.4% of the pie. Ethereum is up 16.87%, while Bitcoin is down 43.5%, while the rest are up again to 36.2% of the pie. So again, this is just highlighting the decorrelation in Hex in real time, right? I just gave you a snapshot that's basically within the past 12 hours with a mid break in between. So this is real time in your face. Cannot be ignored. Hex is not correlated to anything else, so people can just stop it. There's no way you increase market share during a contractionary period if you're correlated to anything else. Seriously, this is that simple. It's just math, all right? So it's just something I wanted to touch on that, and also highlight how Hex is just outperforming the rest of the space um, in real time, right? In a decorrelated fashion. So here we have the first 551 days live of each respective market that you're looking at on this chart, which is Bitcoin, Ethereum in orange, Bitcoin in yellow, Hex in pink, with the T-shares in magenta. And I've also included power trend lines for Ethereum and the T-shares index. So let's first start off with Bitcoin, which is a flat line because it's yet to print a real price return on the live market in its first 551 days. It doesn't until day 562, and that's when we'll get a first reading with respect to the index return on Bitcoin, or the index value on Bitcoin. So the Ethereum index is 950 in its first 551 days, while Hex is at 44,687 rounding up, while the T-shares, that being the value proposition for Hex, is 80,618 rounding up. Now, these are just phenomenal numbers, okay? This is letting us know that Hex is outperforming Ethereum in its first 551 days by a ratio of 44-1. Because I'm giving Ethereum an extra 50 points on the index. So this is where the ETH went, just in case anybody is still wondering. There's some things that people just have to learn, and that is a simple fact that the rest of the crypto space doesn't know anything. And here's more certifiable proof. Hex is literally dusting everything that has come out within the same time frame, right? And for it to crush the big dogs in such a fashion, and by big dogs I mean Ethereum and Bitcoin, because they're the two biggest coins in the space, right? They have the biggest market caps of the top two. This says something, right? This is proving something empirically, and that's very important to understand. Now, what are the T-shares? T-shares are the value proposition for Hex. When you buy Hex and you stake it, what happens is, give me a second here. What happens is that you are swapping out Hex for T-shares. So the Hex gets burnt, meaning it gets disappeared, right? It's no longer a part of the system. It's gone. And now you have created or minted T-shares. So what is the purpose of a T-share? The purpose of a T-share is very simple. It's to allot you a certain number of Hex in interest paid to you trustlessly every day. That's the point of a T-share. T-shares are the value proposition, and a T-share is essentially what you get when you buy Hex and you stake it, right? So what does that mean? You buy Hex, you come here to go.hex.com. Let's say you have 100,000 Hex and you want to stake them. Now, what this means is that you're going to ultimately burn those Hex in lieu of receiving T-shares. Now, how does that work? Well, the system has a T-share rate, and that T-share rate is a specific quantity of Hex per T-share. Now, that's a function of two items, two things: how much Hex you're staking and for how long you're going to stake them. Now, how do we know this to be true? Well, let's take a look at how many Hex we're staking. So far, we've stated that we're going to stake at least 100,000 Hex. Now, let's see what happens at the stake T-shares, which is the T-share count right here, which is currently at 5.583 T-shares for this 100,000 hex. When we change it to 100, well, it dropped to 0.005 T-shares. So there's our proof that the size of the stake does affect the portion of the payout per the T-share. So that's item one. Item two is the duration of the stake. So how many hex are being staked in conjunction with how long they're being staked for affects the quantity of T-shares you're going to be allotted, or in other terms, how much interest you're going to receive on a daily basis. And we'll get into how that works in a minute. So let's just look at the 1-day effect on the T-share rate. No effect whatsoever. Let's look at a 10-day change. Goes up slightly. So from this 1 day to 10 days, it makes the T-share rate jump up approximately 0.27 or so T-shares. From 5.83 to 6.1. That's approximately 0.027 T-shares an increase. Now let's go to 30 days. Well, there we go. That's almost a let's see. Yeah, it's almost a 0.06. That's a 0.06 T-share jump in 30 days. Now let's see what happens when we go out to a year. Well, that jumps quite significantly from 30 days, does it not? A whole T-share. Now let's go to the 10-year mark, which is the maximum level of T-shares that can be attained by a person for the quantity of T-shares with respect to the stake size. And for this stake size, it's 16.749 T-shares. Right, so that means if we go to the max staking length, which is 5,555 days, we can't get any more than that 16.749 number. But here's a cool thing. Once you come to understand how the system works, you'll be able to really grasp fully why staking for the maximum length is the optimal strategy for at least one of your stakes. And you'll come to learn that with time. But let's get back to understanding how time and size affects the T-share count and rate. So as you guys noted, as we just highlighted a minute ago, the quantity of days does affect the number of T-shares. And once we get to day 3,641, we can no longer acquire any more T-shares from the system. That is a max. However, there is a good reason to stay in the system as long as possible because of how the system functions. And the system pays you every day to hold HEX. So the longer you hold your T-shares, the longer you're getting paid. And this is why being staked for the maximum length makes sense. Because while everybody's exiting the system, you're still holding your T-shares, which are always increasing in value, as you can see in this chart. And this valuation is a function of the interest paid, right? Because it has to be. Otherwise, what are you paying for? You're paying for a portion of the payout that the pool is making on a daily basis, right? So that's a whole idea of the T-share. It's the value proposition for HEX. It's how things are priced. And let's take a look at how things are paid out. So here you have payout per T-share. And this is how people are paid every single day, right? If you have one T-share, you're getting paid out 5.8 HEX, 5.72 HEX, 5.79 HEX, and so on and so forth every single day for as long as you hold a T-share. So the longer you hold a T-share, the more HEX you make, the more money you make. It's just mimicking compound interest. That's really all we have going on here. So that's the power of a T-share, and that's why it's outpacing HEX, because it's the actual value proposition. And when we go further through these charts, you'll see it in real terms, right? And you'll see what I mean. So this is HEXpo's Big Payday. Now, what was Big Payday? Big Payday was November 19, 2020, and it was basically the end of launch phase when the remaining coins that were not claimed by the Bitcoiners, because there was a free claim period for Bitcoin holders during that period of time. And I think it was approximately 30% of the coins that were that were made by the system that were released at the time, which I think were like 180 billion HEX coins. So all of that got pushed out into the system, causing a major run up into the weeks leading to that date. This is November 1st, and the sell off that ensued leading into that uh, end of the launch event, end of the launch phase, I guess you could call it. Um, that dip happened to that point in time, but this is the price action. This is the chart ever since that point in time. So this is what we're recording here, and and what's going on is that I'm comparing it to the first halving of Bitcoin, second and third, just to show how Hex is truly superior in performance, even after it literally only did a halving in 1 year's time, right? And this is the end result. 212 days after that, we're outpacing the first halving of Bitcoin, which was the biggest one that gave the biggest price shock to Bitcoin. The ones after are merely insignificant compared to the first one, and we'll get into that in a little bit. But we're outpacing the first halving by 138%, the second one by 1100%, and the third one by 775%. So yeah, Hex is no cookie. And as you can see here, the Big Payday Index is at 1,869, rounding up, whereas the first halving is at 785, and the third halving is at 213, and the second halving is at 155 or 156, rounding up. Now, Hex is just leaving everything in the dust, and this is just all due to its value proposition, right? And that's the T-share. And we're just still consistently making higher highs versus Bitcoin in dollar cost, in dollar terms, and Ethereum in dollar terms. Ethereum is the pink line, and T-shares versus Bitcoin is the orange line. And this is the dollar cost of T-shares versus Bitcoin and T-shares versus Ethereum. Now we're at 78.85% as of last night's crossover, and this is just crazy. I mean, nobody thought we would be getting to parity so quickly. I'm fairly sure of that. And here is T-shares just about to cross over 5% versus Bitcoin. I mean, the way things are going, doesn't seem like it's going to take that much longer. So again, this is just the value proposition for Hex working in real time, guys. It's just tracking it, tracking value, accruing value, and exposing the true value in the system, right? Because it's really, really cheap right now, and we'll see how cheap it is later on. So here's a dynamic Hex stock to flow tracker. So what we have here is the dollar cost of a T-share and the dollar cost of 10,000 Hex. Dollar cost of a T-share is at $1,754 with 18 cents, which is this pink line. The dollar cost of 10,000 Hex is at $971.49, basically rounding up, and that is this magenta line here. And dividing the dollar cost of a T-share by the dollar cost of Hex yields this T-share rate, which is the yellow line, which we finally crossed into the 18,000 Hex per T-share, meaning in order to acquire one T-share, you would need 18,000 Hex. Now, this is a little leading, right? Because we just saw that the actual T-share rate is at 17,911 Hex per T-share. So this is a little forward looking because people are paying, right? They're paying top dollar to acquire the high yielding instrument that is Hex, because Hex pays anywhere from 12 APY on a 1 year basis to 40% APY on a full maxed out stake basis, meaning a 5,555 day stake, which is approximately 15.2 years. So people are understanding the value in this system, and they're buying and they're staking long, and we'll see how so later on as I show the expiring shares chart and explain how that chart is letting us know that that is actually the case. Never mind the fact that the valuation of T-shares is going up, right? Because that is also a function of that fact, right? Because a T-share, as I detailed earlier, is a function of two things: how much Hex is being staked and for how long. So we see in the system a lot of the times that a lot of short stakes are being made, and let's get to that. Now, And when those short stakes are made, because I'm going to be able to explain this in further detail later on, when those short stakes are made and they're ended, right, they're a function of two things: size of the stake and the length of the stake. Now, while the length of the stake might not affect the stake significantly, typically the stake sizes are short and sizable, and what that means is that it's going to drive up, right, the T-share rate, because then the system is calibrating for that size, because it paid out T-shares, or it swapped out the hex for T-shares when the T-shares were made in conjunction with that fact, right? Then as we saw, the more hex that's staked, the more T-shares you get. So that means on the back end, that means the less T-shares you get when you try to restake with respect to that stake, because that's how the system works. So this is how it mimics that compounding effect. It's always increasing in value. And last night's APY was 37.82%. But let's keep talking about that value, because this is how price tracks it, right? The index is at 44,687 rounding up, with a payout per T-share sum of 2,199.68 hex since inception. So if you've had one T-share since day one of the system, you've accrued for that one T-share this many hex. Now multiply that by the number of hex you have if you've been in the system since day one, right? And this is very simple math, because this is a summation. So if you've been in the system since whatever day, you can take that quantity and multiply by the number of shares you have, or hex you have, or I'm sorry, T-shares you have, and that is the number for you, right? So this is a phenomenal thing. Now, as we look at the price line for hex, or the index line for hex, it's important to note that this value is outpacing the payout per T-share sum value 44-2, right, which is basically 22-1, right? So that's a pretty powerful move, but it's just price keeping in line with the value proposition. Otherwise, they wouldn't touch each other like they do on this chart, because there's no controlling of the scale here. These are both linear scales on opposite scales, right? Meaning they're not together. So the moves have to be proportional. They have to be. And this is what we're seeing in the chart. And as you guys can see, the power of the price move is moving the scaling over time, because as we were moving along, if you check the previous videos I made, you'll see that price does touch this line as we go across time. So this is the value proposition functioning in real time on this chart. Now in percentage terms, you could look at it like this. This is the index numbers for the same value, payout per T-share sum. In index terms, is at 199,427. Now, if you want the return number, you just subtract 100. That's 199,327. Now, that's phenomenal return for doing nothing, because you get paid out every day for being staked and nothing more. Payout per T-share index is at 526, which means that the index has increased 4 times since inception. It's just crazy. The daily payout index is at 17,311. Just phenomenal numbers again. Nothing but a system that's accruing value over time, doing what it's supposed to do. Here are the payout metrics. The total T-share count for last night's crossover was at 11,044,000 shares. 11,044,000 shares. Payout per T-share was at 5.809 hex per T-share, from a total system payout of 64.165 million hex. Expiring shares chart. Now this is a chart that lets us know what the staking activity is in real time, and as you guys can see here on this chart, the majority of the expiring shares are leaning towards the front, while we do have a sizable sum out here in the 10-year mark, and then another sizable sum out here in the 15-year mark from the inception of the system. But what's important to note is that this is what's going to drive up, right, the T-share rate as time passes. Because as I explained earlier, staking is a function of two things: size and time. But since we're only able to truly see the size here, it's clear that time is short and not that much of an impact. So it must be size that's affecting the T-share rate on the back end when we are ending the stakes and the system is recalibrating the allotment of T-shares to that staker based on the stake that they just ended. Because it's always going to scale down the number of T-shares that can be acquired by that staker for that next iteration of staking. And this is why you ultimately want to hold those T-shares as long as possible, because they're going to get more expensive over time. They're not going to get cheaper, and that's a function of the T-share rate. And this, which is the payout per T-share sum line, which is the HEX that's being paid out every day, which is creating this gargantuan return. This is just crazy how the value is being created over time. And this is happening every day, which is happening in this pink line, payout per T-share. And this is how that's being affected by short stakes, right, that are ratcheting up the T-share price. Now, the point of this chart is to go over in detail how the stakes are changing from one month to the next for the first 2 months. That's what I like to look at. And maybe I'll shorten it to make it more of a focus on that and maybe the duration. But let's just go on and talk about it, right? So as we can see for June, when we go from the 8th to the 10th to the 15th and the 18th and then this morning, we'll see that the sizes are pretty much decreasing over time after the first couple of days for June. And that's because we're going into the end of the month. People are going to start rolling out their stakes from June to July, and that's all we're going to see. So we're going from 45 to 44 approximately, jump up to 47, then start going down again on the 18th, and down again significantly as of this morning. Now let's look at July and what's happened there since we started tracking this on the 8th. Now we're approximately on the 22% mark here. Let's see, it looks like it jumps up to the 24% mark, maybe 25. Jumps up again to 27 or so on the 15th. 18th, it looks like we're down here at the 29% mark maybe. And then we jump up this morning to approximately 32, it looks like. So the stakes are rolling out, all right, in 30-day period fashions is what it seems to be, or at least to the next month already. I can't imagine them not being 3 to 4 week stakes if they're moving up that much over time and it being the next month out and us still having half of the month to go through pretty much. So that's what that chart is about, right? We're looking at what's going to happen with the T-share rate, how it's going to get ratcheted up. Is it going to get ratcheted up? And this data is letting us know yes, and it's going to be a consistent thing over time as the sharks and up or the dolphins and up keep putting in short stakes to drive that share rate up to make it more expensive to earn interest in the system. Now, these are the all-time HEX versus Ethereum and Bitcoin charts. Now, Ethereum and Bitcoin on the y-axis, whereas the HEX returns on both the x-axis on both charts. And what these charts are detailing is the return plots for HEX on X and the return plots for Bitcoin and Ethereum on Y. Now, each plot is detailing just that, the return for HEX and the return for Ethereum. So if it's on the right side of the x-axis for HEX, it's positive. If it's on the upper side of the zero line for the y-axis, or the zero value for the y-axis, then it's positive for Ethereum or Bitcoin. So as you guys can see by looking at this chart, HEX is primarily on the right side of its zero axis, primarily. And it's the same thing versus both Bitcoin and Ethereum, lending true to the fact that it outperforms both consistently, because these are all-time returns. So while we do have some negative prints for HEX, right, because it can't not be, it's not possible, the key here is to realize that the majority of them are positive, and that's the positive skewness in the return streams. Now, here's the thing. When we're looking at Bitcoin and Ethereum, right, on the y-axis, it's not really the same point of view. They're way spread out. It's like spreading mustard on a slice of bread, right? It's not what you want to see. The variation in the price returns are too wide, too varied, so it's not really a safe asset to invest in, right? And then this again lends credence to the fact that HEX pays you to hold it. So it's a value creating system. And here's further proof that T-shares are the value proposition and they drive the price of HEX up. Now this is the price of HEX at last night's crossover, 97.15 cents or 9.715 cents. Getting ahead of myself there. That was a 10x by mistake, right? Freudian slip. And this is the correlation, right? The 55-day correlation, because it is the strongest one, is at 99.977. Now, the last time I did this chart, it was at 99.976. And again, this is a 55-day correlation, so it's tabulating data for every 55-day period from one day to the next. So over that next series of 55 days, that correlation just got stronger from one pricing day to the next. Right? So when the correlation, if it does start to break down, we will see it first in the 21-day correlation, and then in the 34-day, and then finally in the 55-day, just like we saw the correlation go to almost 1, right? It went up to almost 1 first with the 21 days, then the 34, and then the 55. So this is why we look at the 55 now, to track and make sure that the value proposition, i.e. the dollar cost of T-shares and the T-share rate, are indeed supporting the price value of HEX, because we have to remember, in order to acquire T-shares, which is what pays you more HEX, you have to get HEX first. So it's a closed system that maintains itself in balance, right? You got the T-share rate, which is a function of the dollar cost of the T-share and the dollar cost of HEX. But one is a function of the other in reality, because you can't get to the final boss, which is the T-share, right, without getting the HEX. So that's what this is all about. And the longer the correlation stays strong, the higher the price is going to continue to grow. And this is the HEX, the chart I like to show, which is everything in dollar terms. The price of HEX, the payout per T-share, and then the sum of both, giving us the adjusted HEX value. So what this chart is showing is basically how payout per T-share and which is the magenta line, pink line, and the adjusted HEX value are essentially leading indicators for the dollar cost of HEX, right? And how do we see that? Well, we can see that at one point prior to HEX reaching 9 cents, the future value was already there, right? And that is in payout per T-share, and the sum of both the dollar cost of HEX at that time with the sum of the payout per T-share in dollar terms at that time, right? Because HEX is always going to be building value, and this is what these lines are showing us. It's the value accretion in the system over time. The price is yet to reflect that, but it always eventually will. And that's the important thing to understand about the system of HEX and how it works. So we have an adjusted HEX value of 66.149 cents at the crossover last night, and that is from a sum of 56.43 cents in payout per T-share. Yes, 56.43 cents. 56.43 cents in HEX and 1 T-share. Remember that those numbers were 10 cents not that long ago, and then 1 cent not that long ago, right? So do the X on that in terms of payout. And that is, again, from a sum of the payout per T-share and the HEX dollar cost at 9.715 cents. So this is, again, the system doing what it does best, and that's building value with time, letting you live your life and do what you want to do. And this is the HEX price to earnings chart. Now what this chart is letting us know is that if we acquire HEX, stake it, over time we're going to obtain our return in 17% of 1 year. And that's the same thing the S&P 500 PE ratio yields when looking at it. And it's important to note that the all-time low for the S&P 500 PE ratio was 5.51 at the height, or the pretty much the end of World War I. And the thing is that this is the lowest point, meaning if you bought an S&P 500 stock at that point in time, you were expected to retain your money back in 5.5 years. This is 17% of 1 year. Choose wisely, because this data is only as of February 2021. This isn't even up to date, so who knows how expensive stocks are now. But the point being highlighted here is the value in the system. 17% of 1 year versus 5 years and a half. Something to think about. Now, this is to highlight the network effect. Where we are in terms of the network effect is here approximately. And this chart is Apple, Microsoft, and Google, along with Bitcoin, all in a comparison chart, just so we can all see that price functions as a function of human activity with that system. Even if it's a robot, right? A robot or algo abide is coded by a human. So everything that we think of, come up with, is going to be a function of our organic way of being, and this is the network effect. So any interaction you see in terms of human growth and how we grow, right? Human population, etc. Just the size of the human population is a great example. If you look at any bioorganism, the way it grows is exponentially. It's all the same, right? And if you've taken a basic science class, you've gone over this, so try to remember, because this is very basic stuff. And this is also goes back to my first few videos, so definitely check that out because I really go into detail there. So this is what this chart is about, and now this highlights the APY for HEX, right? How we get paid out. How we get paid out is a function of the coins staked in the system, not the price of HEX, because this system works inverted versus what you're used to dealing with in legacy finance side. So because, as I noted earlier, the APY is 37.82 as of last night's crossover, that means that the staking percentage is somewhere in between 9 and 10. Now let's verify that. Let me verify that by going to appHEX.win /charts, and as we can see here, the staking percentage is 9.674%. So it's actually increased, which is great if you're staked, because what that means is you get a bigger payout in HEX terms. So we are just where we're supposed to be. So if the staking percentage drops to 6%, our yield goes up to 61.5. If a slew of investment firms come in and want to earn some yield and they drive that staking rate up to 20%, then our yield goes down to 18.45%. But we must remember that when coins are staked, they're disappearing. So that means that the supply is being reduced, which means there's less HEX to go around to be bought. So price must go up. That's a bond math in full effect. Alright, so that's the end of today's video. If you guys enjoyed it, please leave a like. If you guys really liked it, please share it with your friends. Maybe they'll learn something. Maybe they'll have a question. Maybe they'll have an idea for a chart that I haven't thought of. I'm always willing to take suggestions and ideas at all times. If you want to find me on YouTube randomly one day, you can find me at youtube.com/whales only, on Telegram at t.me/whales only, and finally on Twitter at twitter.com/whales only and the number 1. Thank you guys for tuning in.